Okay, good evening, guys, or is it good morning? It's 12:36 a.m. and it is midnight over here in Nigeria. So yeah, guys. If you guys watched the video I uploaded last 7 days, my outlook of Euro, USD, and Gold right here, 7 days ago. Okay, I talked about my directional buyers on Euro and Gold, and you can actually see that technicals gives a hand to what fundamentals we have to do. Remember, I think from what I've noticed, and you should know that most of the times, those that know me knows that I don't check my forex calendar news or check out for if there's any high impact news. But I'm very certain that I always check for CPI and NFP. And from the videos I uploaded 7 days ago, I talked about NFP getting to the point of interest, but it happens to be it did not get to the point of interest, but it built up a form of accumulation that it used to tap into the demand zone. And then during today, during the FOMC, we had a bullish momentum that occurred on EURUSD and also on gold. And if you watch this particular video on my outlook on EURUSD, you actually see that it's played out perfectly on the point of interest I share with you guys right here on the video. So yet again, we keep on breaking another record on our predictions. We started from gold posted long time ago last year, and also 3 months ago, and also we talk about sometimes I talk about stock market, I talk about Tesla, and also talk about US 30. We talk about crash 1000, though we don't focus more on synthetic indices, but I talk about US 30, Nasdaq, and crash 1000, EURUSD, and also DXY, and also on gold. So if you watch this video and you go back to your chart, and you will see that it is exactly at the point at which I told you guys we will be having your reaction from. You the fact that I've already predicted EURUSD from the month of October that we'll be having a bullish momentum and we'll be drawn to previous 6 months high, or is that a 1 2 3 4 5 6, yeah, previous 6 months high. That is my target towards EURUSD. And I told you guys that if this current mode we have to go bearish, that means that we have to violate a demand zone that will be stopping it from going bearish, right? But from the directional buyers I've already shared with you guys long time ago on YouTube, previous months ago, talk about taking side central liquidity pool and going higher. And I'm very certain that I made mention of sell side being balanced, right? So that means we are not looking for sales anymore because every sell side inefficiency has been balanced, and then price happened to print an area of buy side inefficiency and also build up a weekly demand zone. And I told you guys we'll be having a reaction on the weekly demand zone. That will be where we're having the price go bullish. And I did refine to the daily time frame, but it happens to be that it used the weekly demand zone, tap into it very clean and smart after filling up the buy side liquidity pool, and we now have that reaction perfectly down to your additional buyers. Now, talking also, if you go over to gold, the same thing, we had it reacted from the point of interest. I showed you guys the weekly order block right here, identifying to you guys that we have a structural break right here that reacted from an area of supply in the lower time frame, and we had a structural break right here. We now have this demand zone right here, so we tapped into that demand zone and we see the reaction right here. And if you could vividly remember, I refined that area of demand to our daily time frame, and I said we'll be tapping this right here. You identify that this is the demand responsible to violate our area of supply right here. And I did go further down to the forward time frame to show you guys this particular area, that is where we'll be having a reaction. And then we have liquidity pool right here that we have to take and then go bullish. Okay, so how possible that I know all of this before the fundamentals? That is to show you that fundamentals follows the overall trend from the higher time frame. It's very important that you're always paying attention to your higher time frame. It gives you the directional overall bias of where price wants to go to, and then fundamental could be used as a catalyst to push to what technical analysis is printing for us. And I am a technical type of guy, not actually like a fundamental guy, and I don't trade fundamentals, okay? So because I have issues with that, but I trade in line with my technical analysis for what I've showed you guys on previous few guys from gold and EURUSD. So we played out perfectly, very fine today, and being Wednesday, so we say that we have in Wednesday being the low of the week. Now you can actually have a confluence with this breakdown analysis I shared with you guys, and that is you paying attention to the current week that you are, and also paying attention to the previous week. All right, so what do I mean? It means that you're marking out your previous week highs and lows, and when we hunt the previous daily range of the algorithm highs and lows from previous week, we possibly see a structural shift formed, or either we get to find an accumulation phase occurring that will lead to the price going higher when it comes to us having a buy entry, and when it comes to us having a sell entry, we likely have to see a dispersion phase. For example, the whole of last week that sold off, it hunted its previous week high, right? So this is it right here. It hunted a previous week high, and then it gave us a structural shift. And what is that structural shift? The structural shift was that it violated the demand that was supposed to continue the price, that was supposed to continue pushing the price higher. So it used that as a breaker block. It sold down lower for the purpose of this to go and hunt its previous week low. After the hunt previous week low, it tapped into the demand zone I showed you guys, and then we saw the accumulation found right there, and then news impact gave it its momentum to push higher. The same thing you could actually see on your USD, that if you go up to the weekly time frame, it is also a confluence of us having our directional buyers that the current this week right here tapped into our weekly order block, and then the current week opened and refused to go below that low. And I always teach those on the mentorship that we don't trade on Monday, because Monday might give us the low of the week or the high of the week, and Monday will tell us that the rational bias if it prints a high or the low of the week and give us a structural break, then we have the confirmation. And then on Tuesday, price will give you a hand to where it has to go to, and we refuse to go below that Monday's low. All right, so for example, we have here Friday and we have this Monday right here. You can actually see that when price tapped into the weekly order block on the previous week, you can see that this current week opened on a Monday, and Monday traded lower, giving us the low of the week with the confirmation that it broke a high right here, right? And then Tuesday formed up and refused to go lower, and they gave us a hunt right here, but still yet refused to go below this low. And Wednesday opened, and we now saw that impulsive move. And remember, I told you guys on the previous video uploaded on 7 days that we are having the retail stops trading lower right here. So that means the reason why the algorithm is doing something like that is that we have a liquidity it has to be drawn to. All right, so it is now printing that liquidity for its purpose to tap into the order block and then accumulate. You can see the accumulation phase right here. This is the buy model, and then you can actually see we hunted the sales liquidity pool, tapping into the order block. Monday gave us the low of the week, gave us a structural break on Tuesday, and then today we traded higher. And where were we drawn to? We are drawn to this trend line of the retail stops resting right here. Not retail stops, okay, of the buy stops resting on this high, where we have with the buy side liquidity pool. It's very explanatory, but it's just for us to have a consistency to what we are doing. Always practice and practice and practice, to we're very sure that our eyes could actually see what happens. And right here we can actually see this formed has a breaker block. Monday forming a breaker block, and we have these hunts right here. So that is our breaker block right here, and price used that on the Tuesday, and on this day used that as a catalyst, has an area of support to push the price higher. That is a simple breakdown analysis right here, and we keep on breaking the record of predicting where price has to run to. So you can actually say that you actually need to study algorithm, and I've already explained all this all the time. The algorithm is responsible to deliver the price. because it is a program that is made to solve a particular problem that we cannot solve by ourselves manually. So we have to write a program to solve that problem from us. And the problem it's trying to solve is to take orders from pending buy orders and pending send orders, and areas where we have inefficiency. It has to fill up that inefficiency in order to balance supply and demand, to balance the sell side with the buy side, and also be drawn to the area where we have the buy side liquidity, the sell side liquidity, take those pending orders, and then deliver to the opposite side of the liquidity it needs to be drawn to. So in this case, when we are having area of liquidity pool, in other cases when we're having an order block, we should make sure that we are having these pending orders printed close to where we're having our order block. So in this case, we actually see that when EURUSD is trading lower, we trade into the bullish order block in form of liquidity. So we're having tons and pools of liquidity printed across when price is approaching our order block for the demand to be activated. So filling up inefficiency with the sell side and also balance the sell side so that there won't be any sell orders to execute. Tap into the demand zone and take liquidity, and then be drawn to liquidity. And we still have a bullish movement. I know some of you thought we are going bearish, but I already predicted this long time ago, since October, and I gave you guys that we have liquidity pool. It needs to go to that area where we have an liquidity pool. All right, so retail traders, they are trying to swing this down to area of maybe support of previous months. I think the algorithm is coming for your stops. So also looking from the other higher time frames, you can actually see right here what is happening right here. We already hunted liquidity pool right here. And God, my long-term directional bias is to see if price we go to this area of resistance, but that should not be my main focus. Just focus on that previous 3 months high. All right, we have hunted previous 3 months low, and we need to go to previous 3 months high. Same thing right here on the 6 month time frame, hunted the algorithm range, hunted and took liquidity from previous 6 months, and we'll be drawn to 5 months. Oh God. So yeah, and that is all a simple breakdown analysis. And don't forget to trace my course on Udemy. It is available right here. With that, you can learn the skills on how I map on my structures. It is something that I won't post on YouTube, but I guess from next year I think I'll have to run a masterclass and mentorship on YouTube, so that you guys can get along with being perfect with market analyzing, like being a market analyst, a financial analyst. Help you up with that. And yeah, so when you purchase the course, you get to learn about my structures, liquidity pools, what liquidity is all about, how you can identify your hand, the Quasimodo pattern. And I rarely use Quasimodo these days, since when one is advancing and there are some stops he needs to drop behind. So you learn about Quasimodo is very important, and also you learn about liquidity, and you most importantly learn about your algorithm, how you can actually use that and use it in confluence in line with your market structure, making a perfect market structure. Paying attention from your higher time frame, and then you have directional bias to your lower time frame. Okay, it's very important you pay attention to your higher time frame. It's easy, not easy, but pay attention to it, so you know when you're having a ranging market or a trending market. What I mean by trending market, like having a lower lows or lower highs, or higher highs and higher lows. But in this case, we are ranging on EURUSD, and that is when we do our stuff right here. So yeah, guys, another one done, and that is it for this year. And this month, no more predictions till next year. Yeah, see you guys. So go to Udemy and purchase the course. The link to the course will be dropped on the description link. So after this video, go to my description link, click on it, and you can purchase the course so that you could learn all of this and be able to predict the price. Once you're able to predict the price, you could possibly find a smart money setup that you could take after you have your directional buyers, understanding everything, and prediction. Take care of yourself, guys, and yeah, be safe. Love you guys.